Well, there's a little drum roll. I don't think it's the most appropriate music for us at the moment, given that we are talking about cryptocurrencies, and it's instead of going up, which it's been doing for quite a while, it's actually going in the opposite direction. Gaurav Nair is with Jaltech, and they have a basket that we quote continuously. Last week, I think, was down 20%. We've had an even bigger sell-off in the last couple of days. Gaurav, what's happening?
Well, Alec, I guess it's a response to some of the macro things happening out there. And on top of that, there's also been some crypto specific news. To remind you, on the macro side, the Federal Reserve raised interest rates by 0.5% recently. And 0.5% is the biggest raise in many, many years. Um, so I mean, I guess it was priced in. So initially there was a bit of an improvement in all the markets. However, crypto, just like the tech stocks, are seen to be very risky assets, more risky than the tech stocks. And so whenever there's an increase in the interest rate, people rebalance out. It becomes almost self-fulfilling, and crypto gets hammered the most. Um, has any of the fundamentals around crypto changed? At that point, no. Uh, so if you're buying and holding with a small part of your portfolio for the long term, it probably is still a good idea. Definitely, as we've always said, don't put in something that you need in the short run. Don't put in your deposit for the house you're planning to buy in 6 months' time. Um, and then to top that off, we had quite a bit of drama over the weekend and in the last few days. So in cryptocurrencies, you have a type of cryptocurrency called stablecoins. And stablecoins, what they aim to do, unlike Bitcoin and Ether, they aim to maintain a peg to other normal currencies. And so most cryptocurrency stablecoins, they try to maintain a one-to-one with the US dollar. And these stablecoins were really the biggest use case in crypto. A lot of people, if they want to make international payments and they don't want to go through SWIFT because it takes too long and it's too expensive, they do it using stablecoins. Because if you do it using Bitcoin, the price moves around too much. Um, and so one of the largest stablecoins, a stablecoin called Terra, it was the third largest stablecoin, and it really, in recent times, had meteoric growth. The market cap just kept on increasing. Um, Over the weekend, it slightly broke its peg, and then earlier this week, including today, it totally broke its peg, and now it's at about 50 cents to the dollar.
What does it mean? What does
Um,
breaking its peg mean?
so I guess when it comes to these stable coins, there's different ways they maintain an exchange rate of one stable coin to one US dollar. The biggest ones out there are a stable coin called Tether, another stable coin called Circle. And the way that they maintain their peg is that for every stable coin they issue, they have one real dollar sitting in their bank account. They sometimes buy very low risk bonds in order to generate some kind of return and make money off it. Um, and these are in the tens of billions of dollars. The market caps are always changing, so I can't give you exact numbers, but they're in the order of magnitude of about 50 to 80 billion dollars each. However, there's another way that cryptocurrencies create a stable coin, and this way is called an algorithmic stablecoin. And Terra, the stablecoin that broke its peg over the weekend, is managed by an algorithmic way. And how it works is that there's actually two different coins. One is a stable coin, and there's another coin that they can print at will. And what they do is whenever the coin starts to trade a little bit above a dollar, so it goes to $1.10, let's say, arbitrageurs come in, and what they do is they have the other coin which they can buy at the market rate, and they can trade it in for this coin, the stable coin Terra, and then they can sell it and make a profit. And that the extra sell pressure brings the price back down to a dollar. The process works in reverse when it goes below a dollar. They buy up the stable coin at 90 cents, let's say. They get to convert it into this other coin, and they sell that for a dollar. And so the buying pressure then pushes it back up. That's how it's meant to work. It was working like that. However, it is vulnerable to getting into a debt spiral, almost like a run on the banks. if people start to believe that the stablecoin is not going to maintain its exchange rate of 1 to 1, then they start dumping it. And they dump it at a rate that goes faster than people can try and arbitrage the peg back to its position. And as this happens, more and more people panic, and more people get out of the position and start dumping it at lower and lower prices. In order to do this, the guys behind the Terra stablecoin, in order to prevent this from happening, the guys behind the Terra stablecoin, they were building up a $10 billion reserve to defend the peg. So that if it was ever breaking the peg, they would go in and start buying up the Terra stablecoin in order to bring it back up to $1. They'd been building up the reserve. They'd got it to about $1.5 billion. They'd been holding it in Bitcoin. And the plan was to eventually build up to 10 billion to defend the peg. But this event happened too soon. And so what happened is the guys behind Terra, as they were trying to defend the peg, they started dumping $1.5 billion of Bitcoin into the market.
So self-perpetuating, almost a downward spiral on both.
Exactly. The reserve they were holding to back the stablecoin was also dropping in value. That's why we saw the Bitcoin price crash very aggressively. The venture capital funds that were behind this company, they also had a lot of Ether. And at one point, they were selling 1,000 Ether every 10 minutes. And so that also led to the Ether price crash.
And what's that worth?
And
what's
Bitcoin,
an Ether worth?
Right now, today's price it's about $1,800 for one Ether. So if they're selling 1,000 Ether every 10 minutes, that's $1.8 million. And so the Bitcoin, the cryptocurrency market is really driven by Bitcoin and Ether. If Bitcoin and Ether are crashing, people lose confidence in the whole thing, and everyone starts selling. So there was lots of sell pressure on these other currencies that don't have anything to do with Terra because of that. And as we currently sit, right now, if you bought a bunch of Terra when it was 1 to 1 with the dollar, it's only worth 50 cents in the dollar right now.
Well, that defeats the whole object of being a stable coin. It's a very unstable coin right now. What does a holder of Terra do?
So the holders of Terra, a lot of them on the way down, they started selling and getting out. Some people realized a 10 cents loss in a dollar, etc., etc. Right now, the holders of Terra have a choice to get out at 50 cents or to stay in because the company behind Terra is saying, we're still going to bring it back up to the peg, even if they need to buy up all of the stable coins. So some people are taking the view that let's just stay in. And some speculators are in fact saying, hey, this is a discount. If they believe that the peg is going to be achieved again, people are buying it in now at 50 cents in the dollar. And if it gets back up to $1, then they'll have doubled their money.
How big a company is the company behind Terra, behind this stable coin that's caused so much chaos?
Well, there are a few venture capital firms behind it. And one of them is called Jump Capital. Another is called 3 Arrows Capital. And so they're behind it, and they have huge balance sheets. The question is not whether or not they will run out of money, but also at what point does their appetite to keep funding this run out? Because if they buy all the stable coins out there, all the Terra out there, eventually they have them all. But how much is it actually worth? Can they ever unload that back for dollars again? And how are they going to do that? So it's more about at what point does the appetite run out.
So how are you reading all of this and putting it in perspective of the BizNews community member who has invested in the Jaltech basket or indeed bought their own Bitcoin?
Yeah. So what this does is it shakes faith in crypto. However, the Jaltech basket doesn't have any stable coins in it. The reason being that when you invest into a crypto investment, you hope that the price would go up. And a stable coin, by definition, tries to maintain a peg. So if you buy it at $1, it's not going to go up. So firstly, people should know that if they're in the Jaltech basket, they don't have any exposure to any stable coins. However, that being said, when you consider what does this mean for the crypto industry as a whole, what it means is that potentially that there are for short-term traders, they may be seriously worried about this and a lot of people getting out. There's been a lot of panic selling in the market. However, if we look at the actual fundamentals behind crypto, while stablecoins is a big use case, it's not the only use case. And the largest stablecoins out there, USDT and Circle, they are largely keeping their peg. That being said, even USDT, the largest stablecoin out there,
That's Tether.
is a couple of cents. Tether, that's right. That's right, Tether. It's a couple of cents off its peg, which in the world of stablecoins is a lot. Um, However, if they have the reserves that they claim to have, they should be able to defend the peg and come back up.
Okay, so if you are a short-term holder, you are going to get caned. If you are a long-term investor, what would motivate you to stay with the asset class?
Yeah, well, I guess what comes to mind is what Warren Buffett often said about being greedy when others are fearful and being fearful when others are greedy. So right now, there's a lot of fear. A lot of people are liquidating their positions. The prices have come down. If you're in the position where there's a part of your portfolio that you know you're not going to touch for the next few years, then these could be really good prices to buy at. These are potentially the lowest prices that crypto's been in a year. Um, so, so this could present a buying opportunity if you still have conviction that the technology itself, blockchain, what it promises it can do for the financial system, etc. If you still have conviction in that, then it's potentially a great buying opportunity to buy these assets much cheaper than they've been available for a long time.
It's an interesting point because if you have a belief in the exponentiality of the disruptive technology companies, you'd be applying the same principles. My favorite company in the whole world is a business called Cloudflare. And Cloudflare, which is growing at 50% a year and brought out its results at the same kind of number, it's the security solution for pretty much the whole internet. It is down, I think it dropped 25% after its quarterly results came out, which in a bull market would have seen it go up 25%. So you're now seeing Cloudflare at prices that were almost impossible to consider down in the $50 when it was $120, $150 not long ago. Is that the same kind of philosophy that you do your homework, you understand what it is that you're buying into, i.e., in this case, the exponential story, and in your case, the cryptocurrency story, and then you ignore what's happening, make your investment, and revisit it in time to come?
Exactly. That's exactly right. I mean, cryptocurrency is more of the same narrative that we see that software is eating the world. What we're seeing is that the companies that are producing the best results aren't the companies that are making the cameras that go on the cell phones, but the guys that are making the software that actually resolves the images. And that isn't that it's the the most I guess um, struggling for a word here, but the textbook example of that, or the most extreme example of that, is cryptocurrency and blockchains, because what it is it's a pure software play. It is totally abstract, and the only question is it much as a much better solution than the current financial system? And it seems to provide that promise. And so the potential for growth when it comes to cryptocurrency is like a software company on steroids.
So there are lots of investors who have been encouraged to have a little bit of crypto in their portfolio, between 3 and 5%. Given the volatility that we've seen and these crashing prices, although there's not very many places where you can hide at the moment. So the JSE is getting hammered, currencies are getting smashed, cryptos, stocks in the United States, some more than others. But would you still go along with, or would you go along with that thesis that as an insurance policy, almost as an out of the money bet, between 3 and 5% of your portfolio can be held in cryptocurrency?
Yeah. So I guess it needs to be a portion of your portfolio that you are comfortable to leave in locked in over a multi-year period, let's say 3 to 5 years at a minimum. So that number might be too high or too low, 3 to 5%, depending on your personal position, if you need to access that part of your portfolio. Um, the other thing I would recommend is not to use leverage. one of the reasons that we see the cryptocurrency market dropping so steeply is that it has a much larger percentage of retail traders that have access to unregulated leverage. A lot of these exchanges, they offer up to 50 times leverage. So a lot of retail traders, they see the price dropping, they think it's going to bounce, as they often have seen, they come and leverage aggressively. And then if the price drops further, they get liquidated out. And that causes cascading liquidations. It then causes the price to drop again. Some other people are now out of the money, liquidated out, etc. And that's part of the reason why we see such steep drops in crypto. I expect over time, as these markets all get regulated, that won't be allowed. And there'll be limits on the type of leverage that exchanges can offer. But for an investor, a lot of investors see other people having made a lot of money on crypto. And they go in leveraged aggressively because they have a fear of missing out and they want to get rich quickly. So I would say for an investor not to do it with leverage, to do it with a portion of the portfolio they're happy to leave illiquid for a period of time, and then to forget about it. Once they've allocated, don't check it daily. The price moves so aggressively that it doesn't do good things for your anxiety.
So it's almost a case of only invest what you can afford to lose because you need to sleep at night, and
Mm-hmm.
don't look at anything in the short term. Come back to the portfolio in time to come, because that's actually the time scale that you've got to look at, 3 to 5 years.
Exactly. That's exactly right.
What's happening with your basket? Are you seeing that your investors are trying to or regarding this as a buying opportunity, or are they also panicked? Are they also selling?
So, Alec, I think it speaks to potentially the segment of the market that's been attracted to our basket. I'm actually surprised at how there's so little panic. Most of the people coming in, it might be that they're not the type to be checking all the time. They aren't kind of a very young part of the population that's checking live prices all the time. And in fact, we've seen a lot of interest to buy at these prices now, which, like I say, surprised me. I would have expected panic coming into work today. I was expecting a lot of investors calling and saying what's going on, etc. But no, they've kept their stomach really well. And in fact, there's been a lot of interest to come in now.